Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the markets were very much whipsawed as the US dollar, which measures the greenback strength against the basket of six major currencies, surges from 108.5 to a high, or a fresh 20-year high of 109.95 before dropping back to 109.60. Figures out of the US, the ISM manufacturing PMI came in at 52.8 as previous month, which gave the dollar a bit of a boost. Nevertheless, the rest of the markets did take quite a severe hit. When we look at the Australian dollar, it's tumbling further towards its objective, which is seen around 68.80 to 67 cents. As investors await the Friday's job report to gauge how hawkish the Federal Reserve will be when it comes up to its rate decision on the 21st of September, the market last month in July added 528,000 jobs, while the unemployment rate dipped to 3.5. Looking to this Friday, the August US non-farm payrolls report is taking the stage, and the market will be looking to an expected 295 jobs added, and along with that, with the unemployment holding steady at 3.5. If the market finds those numbers slightly off, then we will get further whipsaw price action along with the US dollar, which is slightly overextended. But looking at the Australian dollar, we can see at the moment the market is heading lower and looking towards that next target, which is seen around 67.35. With the base coming in around 66.80, I feel the market is getting a little bit oversold, but nevertheless there is a bit of divergence here. So either way, as we head lower, there is likely to be a bullish response very soon and see the market rebound, possibly back towards that top side, which is seen somewhere around 68.5 to 69 cents. Having staged 3 days of bullish price action, the euro has found itself in a bit of a spot and backing away from the 100.7075, now looking back towards the bottom side of the range, which is seen around 98.80. We do need to see a bullish response from there, otherwise we could see further risk to the downside and look towards the 96 region. There is also a bit of divergence as well in the RSI, so let's see if the bulls can return in respect to challenge and support this level around 98.80. The dollar yen rallies further and breaks through that 139.5 and now looks towards that 141 objective. From the advance, the market's posted back to highs last seen in 1998. Still, let's see if the market does back away from that 141 area. We are overextended, and as well as the US dollar. So no doubt I do expect to see some correction coming back soon in this market. But as I mentioned yesterday, the break of 139.5 would give a stop loss rally, and therefore we're getting that at the moment. And as I mentioned, 141. Let's see what happens from there, and do we get a rejection or not. Sterling has headed lower, and from the call to the downside, I expect to see the support hold around 115.45, which is where we are right now at the moment. We do need to see a bullish response, otherwise we could be heading even lower, that is, and therefore we need to look at the monthly to get some kind of an assessment of where the market may hold. And you can see here from that flash crash, the market did respect that 140 region. Nevertheless, with the dollar rallying as it is, has put further stress on the pound, and we are oversold. So I do expect to see some kind of bullish response around this level. Otherwise, we will be looking for another 140-point decline if we don't see any kind of rebound into the European session later today. Gold has fallen further and now closer to its objective of 1,680.85. As we're now underneath 1,700, there's only 15 points left in the decline, and let's see if the market does respond. We are extremely oversold, and along with that, the ADX is trending bearish. But I do feel we could get a bullish rebound or response from there due to the recent challenge back in July that saw this bounce and this very firm candle coming back into play. Finishing up with oil. Well, from the engulfing candle, the break of that confirmation to support the negative signal, the market has reached its objective of $86 a barrel. Let's see if we get another response, or if not, failing to hold at 86, sees little support until around $82.60, with the technical still remaining somewhat heavy, is giving some broader view that we could see a further breakdown in this level failing to hold. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.